Alright, welcome everybody back to the Simple Markets channel. My name is JB as always, and today I'm going to be going over just some of my more recent trades to keep you guys up to date with my performance. We're going to be going over UJ, AJ, AU, and then there is a missed trade we're going to look at, and then one that I'm currently actually in as of this recording. So far, it's been a pretty solid year. We can see that I have about a gain of 9 RR this year, which is about 4.5 per month if you divide it by the 2 months we've had. My win rate is definitely skewed a little bit upward because of the break-even rule. If I were to go into here and remove the break-even, you could see that we have about 5 wins and 6 losses, which is still a fairly solid win rate, about 45%. Typically without break-even, I find that my win rate is within 36 to 41%, so a little bit higher than typical there, but we can also see that it is significantly higher when including that break-even. So a 70% win rate does not mean that I won 16 3RR trades. Just want to clarify that. Obviously, the equity curve would look very different if that were the case. I use break-even. I also like to track the performance of it because I've gotten a lot of questions regarding if it hurts or helps my data. We could see here I significantly would be underperforming without that rule, and we will see how that kind of pans out in the longer term as well as the year goes on. But without further ado, let's dive into the charts here, and we're going to start by looking at let's start with AUDJPY, a very basic and simple setup here. So as you guys know, the description has the downloadable for the trading plan that I use and the strategy. I think it's important because I like that we added some takeaways and trade images in there. So it's not just a straight up document with some rules. It actually gives a little bit of the mindset perspective that you need as a trader. So definitely check that out if you haven't already. And if you do download it, you can always follow along the rules that we're going to be going over here. So first thing I look for is that sweep on liquidity. I typically do not find myself having counter trend trades unless this occurs. We have a very clear sweep here with a high volume wick, and then a break of structure to the upside of that previous high or low. I then want to spot a fair value gap within my range, which we could see happen fairly close to the high here, and then price worked its way back down to entry, tapped me in, and then very quickly continued bearish with that overall trend. However, I do understand that with the strong liquidity sweep that we see here and the break, I have found these specific setups to work fairly well. So I'm perfectly fine with the loss here and on to the next one, which is going to be AUDUSD. Very similar here, but is pro trend in this case. So we see we are just moving bullish in price action. We have a sweep on liquidity, a break of structure again of that previous higher high. We have a fair value gap within the range, and this one fairly quickly just runs right through the stop loss here and a shift in that overall higher time frame trend. So these two for a combined total of -2 risk and reward so far, and for those of you that don't know, I risked 2% on my personal account, so about a 4% loss amongst the two. And the next trade we're going to look at here, we will just briefly look at pound AUD, a very good analysis, very solid setup. Almost identical to that AUDJPY trade we looked at, where we see a very impulsive and strong liquidity sweep with a wick of a low, breaking that lower high, having a fair value gap right around that entry level, which I always like to see, and then price worked its way in, consolidated a bit, did end up grabbing this liquidity point low, and then ran very aggressively that overall take profit. I just briefly wanted to go over this one because the analysis was fairly sound. We can see the trend and bias overall playing out well, despite the close miss here and then price running in the intended direction. So a really solid trade there as well. Obviously, because it's a miss, it will not be logged in my journal. And then last but not least, we will look at USDJPY. Very, very similar to all of these. This one was pro trend. We can see that we are bearish overall. We sweep liquidity here and then we break structure downward. We have a huge fair value gap right around that entry level, which price did end up coming back and filling that in. Once the rules are met here, I grab my fib level and I draw it from the high to the low, following that bearish trend and enter at the 75% of the range. This makes it nice and simple, nice and systematic. I do get questions about this sometimes, so I'll briefly go over. For those of you that were to draw a supply zone here, if I ask 10 of my subscribers, I may get 10 different drawings for a supply zone, and all of them will insist that others are wrong because of certain rules. This is why we use the fib level. Some people might go in here and draw this little blue area or this last up move as a supply zone. Some may have learned it as this area because it's the overall high. That's your supply zone. Others may consider it to be an order block, which is something like this small zone in here. Others may consider it to be just that last candle before the down move. And then other ones may consider this that last candle before the down move. So Of course, a little bit of a rant there, but I guess the overall point I'm trying to get across is removing that discretion entirely by using a fib level is what allows for that consistency, but also the peace of mind. Because one thing I find is a lot of traders who may use supply and demand, they could have multiple of those different ones that we talked about. And then after this trade ends up being a miss, for example, they may go and deep dive into it and say, oh, I should have taken that last candle before the move, before this last candle before the move. And then it does add complexity to your edge, but also that longer term inconsistency or peace of mind. I understand that when this range forms, it is completely mechanical to draw a fib from the high to the low, and my entry never changes. And this gives me peace of mind regardless of what you might say about win rate or trades missing versus tapping in. Very similar to pound AUD, I can walk away from fantastic analysis like this without going, I should have used the 60% fib and I would have gotten tapped in, or, oh, if only I traded, liquidity zones, I would have been able to get in here, or maybe that demand zone from this high to this low, I could have traded there and gotten in. I can walk away from these trades with complete peace of mind, knowing that my entry is completely mechanical, been tested a significant amount of times at the 75%, and that's just something that I prefer and found optimal in my data. It's very important, sorry for the short tangent there, but to approach trading from this probability mindset and this understanding that no, the 75% doesn't have any analytical reason regarding institutional involvement. I know OTE is a concept out there, optimal trade entry, and all these things where they claim that for whatever reason, institutions may want to target a certain fib level. It's perfectly fine to use that as well. I'm sure I believe it's a 618 level would work fine. But the overall goal is just understanding that if you keep it mechanical and as systematic as you can, you will have peace and longevity within your edge. And I think that is by far more important than trying to over-optimize your entries on every single pair. With that short tangent aside, we could see very easily and clearly price worked its way back up into that 75 level and then very quickly ran that take profit. Tons of our students got to capitalize on this trade as well, which is great. I know a few of them, I had to bring out the psychology side of my coaching here, where we had price start showing a very tiny minimal sign of reversal, but I understand that for some of those who have evaluations on the line or trading challenges with firms, or even a lot of capital, it can be very nerve-wracking to see price come this close to your take profit and then start turning around. Hold steady, understand that you have to trust the edge. The mechanical side of the edge says you always target the low. Let it happen, close the charts if you have to, and watch price run that low and inevitably hit your take profit for a great gain of 6%. This trade came in to wipe out losses on AJ. AU was a little bit more of a recent loss, so that didn't necessarily wipe out the loss for it, but you can understand that a plus 6% and a minus 4% is a net gain of 2%. And last but not least, just briefly, I will show the trade that I'm in right now. Almost identical to what we've gone over before. We have a bullish trend here, a sweep on liquidity, a break of structure to the upside. Following that overall trend, I don't need the clearest sweeps on liquidity in my opinion. I find that trend is your friend, and it's obviously a stronger position going with the movement of price action. Price then low and slow consolidates its way back down into my entry. Taps me in here once again at that 75 level for a fixed 3RR, and then we're just going to see how price pans out, and who knows, maybe in a future video we will be seeing a review of this trade as well, whether take profit or loss. I hope this brief trade breakdown was good for you guys. I hope you appreciate the transparency and me just going over my positions, giving little hints of advice as I go. Once again, we'll take one last look at my journal here, and if you guys have any questions, or even if you want me to send you this journal personally so you can kind of go through the different links here, feel free to reach out to me. My Discord is jblaisdell729, so it's this text at the top here of my charts. If you reach out to me, I'll be perfectly happy to share you the journal. You can go over the trades yourself and kind of learn from them. And of course, with any other questions you have at all, you can reach out on Discord, and I'm willing to help out. Thank you all for watching. I appreciate those of you who tune in every week, and I hope you gain some value from this video. Don't forget you can download this strategy in the description below, and I will see you guys in next week's video.